Welcome to Startup Self-Funded. Today, we will discuss market cycles and why this is the perfect time to start deploying capital into the crypto market. My goal is to help entrepreneurs fund their startups with their own capital. Let me show you that turning less than $1,000 into $50,000 is achievable in less than a year. We are about to experience another parabolic phase of the bull market where some crypto assets will grow more than 1,000% within less than a year. And you don't want to miss out. In reality, the bigger markets are driving the cycles. Global real estate sits at more than $600 trillion, and typically it follows an 18-year cycle, which is 14 years of growth, followed by 4 years of downturn. Last time there was a significant collapse of the real estate market was the spark that led to the creation of Bitcoin. Based on this real estate cycle, we expect 2025 to 2026 to show another decline. Thus far, China has seen some serious hiccups in 2024 with their real estate market. Japan is also having some issues with their economy, while the US government debt is out of control. Typically, that leads governments to print money to reduce the problem, which in turn leads to asset prices experiencing a serious price appreciation. Since the crypto market never experienced a decline of the real estate market, we have to prepare ourselves for the worst. Let's take a deeper look at the crypto market specifically. You can spot the halving dates on this chart as the green vertical lines. I also denoted the dates of the US presidential elections in blue. Meanwhile, the M2 global liquidity levels are shown on the bottom graph. From the first halving, we saw Bitcoin price surge more than 12,000% within 1 year post-halving. However, we can also see that most of the growth was concentrated in the last month prior to the collapse. As well, we can also notice that there were occurrences of large decline of more than 70% even during the bull cycle. The second bull market seems to have sustained 200 days of massive growth, starting just 180 days after the US elections of 2016. In the space of 13 months after the election, it culminated into another 10,000% price increase. This time, there was a decline of 84% of Bitcoin price between the peak and the bottom of the bear market another year later. Occasional retracements of 30% to 40% during the bull market were commonly occurring. The third bull market was composed of two major peaks, but again, the highest peak occurred a year post-US election. Then another year later, the FTX collapse occurred, causing prices to crash 78% from the peak. From bottom to peak, this bull market grew more than 2,000%, with occasional dips of 30%, and one massive correction of 50% before going on to another massive run-up. What we can assume is that peak to bottom seems to occur within 1 year of each other and show a decline of more than 70%, which may or may not be reducing. We have to be prepared for 30% dips along the bull market's trend, and may even experience a massive correction of 50% along the way. However, it would appear evident that from the US elections, we most likely have around a year to max out returns. If we take a Fibonacci retracement, we can see prices going down below the 0.782 level in 2015, same for 2018 and 2022. Instead, if we use a Fibonacci extension to try to predict the peaks, we see the price going above 17.618 in 2017 and above the 3.618 in 2021. So the retracements seems relatively consistent, but there is significant reduction in the growth potential. Given the Bitcoin ETFs and change in GAAP rules regarding accounting of crypto assets in financial books, I would argue that going back to a 3.618 is possible this cycle, meaning the price could go above $200,000 per Bitcoin, which is more than 10 times price increase from the lowest point at $16,000. At the time of this recording, that represents about another 3x return. If that turns out to be the case, the price could potentially collapse yet another 70% of that, which would bring price back onto $60,000. As far as M2 global liquidity supply, we see some rough correlation but with significant lag, so not necessarily a great indicator for predicting prices or timeline. To summarize, any investments into Bitcoin prior to the election is likely to perform decently with an expectation that a significant 70% decline is possible, starting about a year post-election that could last for another year before consolidating into yet another start of a bull market. Self-Funded Startup is a social podcast for educational purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the channel. Listeners are encouraged to do their own research. The crypto markets are highly risky investments that can lead to a complete loss of capital.